Good morning to everyone. Where's my boy Simos today? Welcome, welcome, welcome. Welcome to brunch. It's a beautiful, gorgeous day here in Toronto, in Ontario. I hope all is well and you're taking advantage of this weather wherever you're dialing in. There you are, Simos. What's going on, my man? How you doing, buddy? I think you're on mute there. I can never get you not to talk. How you mute yourself?
Good morning, Jazzy. Good morning, Canada. From beautiful and sunny Mississauga is where I'm at. So good morning to the entire nation. I've already seen. I've been in a waiting room for the last 3-4 minutes.
Nice.
And I've seen good morning from Paris, good morning from Iowa, good morning from all over the place. So a big, huge, sunny good morning from the GTA.
I want to welcome everyone in the REC Nation and the REC family to brunch. We have friends that are watching live on YouTube. Welcome to you as well. We have friends watching live on Facebook. Welcome to you. We have friends who are watching live on Instagram right now. Shout out to everyone who's watching on the other platforms. Busy week, my man.
It was a crazy week.
We had, again, I just said live on Instagram. I want to give a shout out to all the night cappers that have been joining me every single night these past couple of weeks, almost a month now, for an hour live on Instagram. Had Cameron on from BC yesterday. We spoke about Vancouver real estate. Not sure if you got a chance to watch it, Simos, but we were just talking about what's going on in the market in Vancouver as well. And so
Cameron Manning?
Cameron Manning. Yeah, he joined me last night on Nightcap. I see a lot of familiar names here. So thanks for all the support on Nightcap, and the podcast and everything you guys support us on. So big shout out. The podcast had a big week this past week. We had a couple of major
Headliners.
guests, some headliners, man. I know you were really excited. You hopped on the podcast with me with Uncle G, as he's known, or Mr. Grant Cardone, owns a little over $1.6 billion of real estate. And we thought, well, that's in our business. That's in our wheelhouse. I think it's a good idea that we talk to him. But that episode is going to be airing in about probably about 2 to 3 weeks. But what was one thing that you maybe caught on from Uncle G, my man?
Well, I mean, like Grant Cardone, to me personally, like I've read his books years ago. He has the 10X book. He also has If You're Not Obsessed, You're Average. So these are two qualities that we have implemented. Well, not two qualities. Both books have content kind of outlining what makes great leaders. I like to consider myself a student of the game, and I like to consider myself most definitely, I take pride in my leadership and what we do every day. And I have implemented so many strategies directly from those books to be obsessed, to be audacious with our goals, to be kind of like, you can't be scared to dream big. You can't feel guilty for dreaming big. You can't be your own worst enemy. So what those books really and truly say is, if you're going to execute, so if you've made the decision to execute, because if you're not going to execute, you're going to be average. So if you're going to execute, go for the stars. Go up. Hit
Look,
it.
there's nothing wrong with being obsessed. There's also nothing, in my opinion anyways, wrong with as long as you're happy. You know what I mean? As long as you're happy, you're not complaining. If you are complaining, know that there's a lot more out there for you. Getting obsessed is something that I think is a very unique skill to some. I mean, I always say that if LeBron or Jordan, and I know a lot of people are watching The Last Dance on Netflix right now, or Beyonce, didn't get obsessed. Like, imagine how much of a disservice that would be to the world if we didn't get to see their uniqueness, right? And so people like Grant and there's so many others definitely bring a lot to the table. And Grant was interesting for me as well, like in terms of everything that he's done from a real estate perspective, right? What he owns, how he goes about creating deals. We talk about it all the time. The best deals in real estate are created. We're going to obviously be talking a lot more about that on today's brunch. Again,
yeah, because we literally created deals.
Yeah,
literally
and created opportunities, right? You mentioned books, the ones that Grant wrote. Another guest we had on was Mr. Mark Victor Hansen, the author of Chicken Soup for the Soul. I'm sure you've read, or like everyone here has read one of the Chicken Soup for the Souls. He's done sold over 500 million books. He's in the Guinness Book of World Records. He dropped a lot of content, a lot of knowledge for a little over than an hour, just talking about how everyone has a book in them, and the importance of that your thoughts become your feelings become your actions, and then those are your results. So some really, as you call them, headliners coming up.
But wouldn't you agree? But wouldn't you agree with every word that came out of your mouth?
Well, look, I mean, not even from yes to answer your question, but I like to think that that's been my studying, right? Like, I don't have a formal education, and it all kind of comes from a personal education, and so that's the 20,000 hours I've probably spent in that realm, right? Where the results I have now are based on my thoughts, feelings, and actions from 60 days ago, 90 days ago, 5 years from now. And so what I would implore people here is be very, very careful of the thoughts that you're having, because again, those become your feelings, and that's what you're going to bring about. Like attracts like. So whatever you're thinking about and feeling right now is going to be, those are going to be the results that you get 60, 90, 2 years from now.
Yeah, and going back to Grant Cardone, what I will say is he dropped some serious information. he shared his it was a completely acoustic Grant Cardone. This wasn't like if you know Grant Cardone, his events are way over the top. He goes bananas on everything he does. And this was Grant being Grant. And I remember you asked him, like, what's your concerns? What are your fears right now? And we thought he was going to say, I fear nothing. Like I'm the man. I'm the charge. And the answer was so polar opposite.
And the truth.
He said, I fear everything. He goes, I'm not going to be happy. Yeah, I have money. I'm good. But like, I'm not going to be happy when I know my neighbor is suffering. Yeah. I'm not going to be happy when I know unemployment is through the roof. I'm not going to be happy when there is no real plan of action by my governor. He said he sent a tweet. He's in Miami, in Florida. He said he sent a tweet that I'm opening for business on Monday. Nothing's happening here. I'm going to put on my gloves. I'll put on my mask. I'll do what I have to do, but I'm opening on Monday. The governor of Florida sent a message, says, it's fine because we're open on Monday.
Yeah,
he was opening. Like people are making decisions. So, anyways, it was a lot of.
Well, I think you know, and I'm curious from everyone who's watching right now and listening live on all the platforms. Welcome to everybody on YouTube, Facebook, Instagram, and everyone here on the live webinar. But I think it's safe to say there's a sense of like, okay, we're gonna reopen now. Like I think phase 1 in Ontario starting on Tuesday after the long weekend. But that sense, that consumer confidence, definitely we're feeling that. As I was about to come on, I got actually a message from some new people in our wheelhouse and to the REC family, and they're like, guys, can you just quickly just kind of do a quick overview of what you guys really do? We see a lot of media content that you guys push out. You guys give away all this information up front, but what do you guys really do? So I thought it would be good if Simos, you and I spend a minute or two. I know all our REC insiders that have been with us for 15 years, they know what we do for a living. But for all of our new friends that are joining us or making the decision if they should continue to be an REC insider, why don't we talk a little bit about that? I mean, we're a real estate company first and foremost. We help buyers, sellers, and investors right across the greater Toronto area. That's a 70-kilometer radius. And Simos, I'll let you touch on in a second about what our team does, because we do have 33 realtors. It's not just Simos and I. We have 33 realtors, 10 support staff that consist of admin staff, our directors, Tyler Walburn, aka our air traffic controller. He's on here. We have our director of operations, Bobby Puim. We have our director of sales and marketing, Laura Stewart, and then we have a full media squad where we lead with education. That's why you see a lot of media content. But why don't you talk a little bit about Simos? What our 33 realtors do, man?
Yeah, so I mean, we lead a pretty big sales force into battle every day, and when I say sales force, I mean boots on the ground. Myself and you, we do the education. We curate and put together and create the deals and opportunities for our investment wing. Yeah. So the people, like we have about 200 people in this live webcast, and I know there's a couple hundred people between YouTube, Facebook, and Instagram. So this morning, effectively, we're speaking to 400 or 500 people for the next hour and a half. That's one division of our business. That's the investor division. That is where our passion lies. Like I'm a commercial broker, you're an investment broker. At the end of the day, like this is our passion. This is why we do what we do. Now, our other passion is leading, mentoring, and coaching. So we have these 35 brokers, and every single one of them, I think our newest broker is 3 years in the business, our most junior. So we're not talking people who don't know what they're doing. We're talking people who have been practicing for longer than I've been alive. Some of them, straight up.
Hey, you turned 40.
That's right. Maybe not anymore. Maybe not straight up.
We know how old you are now. We know how old you are. Don't try to hide behind that.
I grew the beard back.
Yeah. Well,
So basically, my man, we lead the charge on. We're at 35 agents.
Yeah,
not 33 anymore.
And our realtors help with it. Like if you're looking, or if your family member might be looking for something in terms of a first-time home, a first home, a condo, maybe smart sizing, moving up and down. That's something that our realtors can cover as well, right?
So regular real estate. So these guys are doing the regular real estate practice. the edge that they have are a lot of the things that we implemented. And I'll speak to that too, because we are mentors and coaches to the real estate industry. And that's kind of part and parcel of being in this position for this long. But at the end of the day, our brokers on the ground, this is why we have like our finger on the pulse, is because every single week, so I have a rotating schedule. So week 1, for example, I speak to my top 10. Week 2, I speak to my 10 to 20.
You're
Week
talking
3,
about
I
the
speak
actual
to
team.
juniors.
You're talking about the realtors, just to confirm.
The actual realtors. So my third tier, my guys who are 0 to 5 years in the business. These guys are the guys doing the leases. These guys are the guys doing the grunt. Meaning, so I get a perspective. When we share our insight today, it's not coming from a report on CMHC alone. Like, we touch 700 transactions a year. We have our own data for this market. We're consulted on by CMHC, by Royal LePage, by the media source. How many times have I been on the Globe and Bloomberg? So basically, because they're on the ground in the volume that we do, we have this data. My intermediates are all buyer agents. My top guys are all listing agents.
Yep.
So Joe Blow gives us a call and says, "Hey, bud, I'm looking to do this, that, and whatever. I need to sell this home. I need to do this." When we put that person on the street for them, these are guys who have sold thousands of homes. If they're a buyer, they're like our buyer agents know every building downtown inside out. Like, if you tell me your kid's coming to Toronto and you need a condo for them to be able to get a roommate and kind of house hack and all the things that we talk about, like, our sales force knows such intimate information. They know the condo corps. They know the rules of each building. You can't do this here. There's too many students here. There's too much distractions, too much noise from the GO train passing by. Like, it's those intricate details that, like, from mine and your perspective, when we sell investment real estate, those are the things that we're looking for.
Yeah.
Because we're targeting tenants. But as an end user, you're going to have somebody with direct and intimate knowledge of wherever it is you're trying to go. So that's what we do.
And look, and thank you for that, and just going over that. And then from the investment perspective, because we've been doing this for 15 years now, we're part of a couple of Canada's largest investment groups. So we've also been able to connect with outside of our area of expertise, which is really call it Greater Toronto Area / Southern Ontario. But when it goes to when somebody asks us about a property in Vancouver or an investment option in Nova Scotia, what we do really well, because we've essentially grew a list of savvy investment realtors right across the country, guys and gals that have investment properties themselves, but their business is heavily focused on that. So they know what ROI means. They know what to look for when you're renting out a property. They know how to rent out a property. That in itself is a skill that's needed when you're dealing with investment properties. And so if you ever need to reach out in terms of looking at a property in Vancouver, you're not going to be dealing with anyone from our team, but we can always put you in touch with someone. As I mentioned last night, like on Nightcap, I bring on people, and through our podcast and even our webinars, we bring on people right across the country, which actually brought on today's topic. A couple of weeks ago, we did a virtual, I think it was on your birthday actually. We went right across the country virtually and sat down and spoke with expert realtors in their area. And then what came out of that right after, like within like 5 hours, we had a couple of hundred emails from all of our REC insiders saying, hey, like, can you guys get us opportunities? Can you bring opportunities to the table? And so
no, it was more like, enough COVID. Thank you for the education. We get it.
Yeah.
We understand. Can you hit us with a left and a right? Thanks.
Yeah. Like, can you actually, we're looking for those compelling buying opportunities you guys keep on talking about that are presented in recessions. I mean, we know it. We've seen this before. Like, that 15 years, we've seen market downturns, and we've personally made money in these type of downturns because there's people who get scared. They get fearful of the market, and so that's an opportunity for all of us as investors to look at opportunities. So we're gonna talk about kind of high level the few properties that we're gonna be bringing to your attention through an email later on today. If you were part of our, if you're part of our text community, you did receive this link yesterday. So it does pay to be part of the text community. It's absolutely free. We send out an email to approximately, it's actually on my board here, 6,694 REC insiders, but our text community of a little under 500 people receive the link to the opportunity the day before. So if you're not part of our text community, just send us an email at some point to info@REC Canada. Just reply even to any email you got from us, maybe even the confirmation or for this webinar. If you're on YouTube, on Instagram, or on Facebook Live, email us info@REC Canada and just say, I want to get part of this text community. Because see, so what happens sometimes is we get only 4 to 5 or 10 units at a project, or sometimes it's one building that we don't have enough to serve everyone. And if a builder says to us, for example, in a pre-construction project, says, well, you're only going to get 8 units, and these 8 units are part of the first allocation. If you're part of the text community, those units might be gone the day before. So I really want to stress that it is important. I see a message here. How do you join the text community? Just send us an email, Natalie, info@reccanada.com, and say, I want to be part of the text community. Everyone else today, you will receive this email. You will receive this email probably about 2 p.m., 3 p.m. Eastern today, with all the information on the opportunity that we're going to be speaking about today. Before I think, look, Simos, something that you and I haven't done together in a while. I've done it separately on a podcast. You do it all the time with the team, and just talk about the importance of diversification within your investment portfolio, right? Like if you're going to diversify within investing in general, do as you please. I mean, you're not going to hear me personally speak about stocks or anything. It's not my wheelhouse. It's not what I'm an expert at. I don't know it. But when it comes to real estate, I still believe you should diversify within real estate. And so I want to talk a little bit about the different types of investment properties, income properties that someone can take advantage of. For everyone on this webinar right now, just a quick housekeeping note. Keep all your questions, if you can, just because it makes it easier for us to organize in the Q&A section rather than in the chat, only because, again, we can get to your questions. So let's speak a little bit about, Simos, from an investor's perspective, what options people have, right? And essentially what we can help them with. Like we don't here at REC Canada do anything from a mortgage investment point of view or land development. We will make the introductions to the top brokers and top companies.
Our extended family does.
Exactly, right? We'll make those introductions. But what's in our wheelhouse and what we do on a daily basis is income properties, pre-construction condos, resale condos, multiplexes, commercial investing. So let's talk a little bit about the different opportunities. Why don't we start, like I generally, and you and I have, we have a couple of different styles, but I generally like to start the way that real estate is kind of built up. And so the first place that I like to start is in a new built condo, pre-construction condo, some people will call it, before it even gets built, you can invest in a unit. Let's talk a little bit about pre-construction, just some high level benefits, and then we'll go into considerations. Guys, keep your questions in the Q&A, keep them coming. We will get to them, and then we'll jump into the opportunities.
What I will do is I'm going to first answer in the simplest way I can, only because for the sake of time, we do have monster opportunities today to cover and talk about with pros and cons. So I want to start with diversification. So diversification is by far the most important piece of any portfolio. So if you only have one investment property, you don't have a portfolio. You have an investment property, and that is more than 99% of the rest of the world has. And
kudos to you, and that's amazing that you even have, like it's great to get 100. That's right. But I always say at least get one.
And it all starts.
One can change your life.
It will change your life. So it all starts with one. What Jas is referring to is diversity. So when you get up to 1, 2, 3, 4, 5, 6 properties, let's say you have 4 properties.
Yeah.
Or 4 deals. The diversity that Jas is referring to is to not be tied to any single geographical market, time in the market, or anything that can bring you mass disaster. So we're looking to mitigate. So diversity, just like multifamily, you have one roof over 8 doors, for example, and if you lose one tenant, you have 7 others paying the bills. you're mitigating risk of vacancy, and you're mitigating risk of capex, capital expenditures. So you spend less, you have more people paying for it. It's a better investment, period. Now, with diversifying your actual investment styles, let's say Jas mentioned pre-construction. Pre-construction is we're investing into a city's future, into the real estate market's future. So if we buy a pre-construction condominium today, that's part of a massive project and it's 6 years out. If you invest in a townhome today, that's going to be ready in 18 months. Those are two very different investments that carry very different risk profiles. Why? Because the townhome, first of all, is a resale low rise, meaning it has a specific demand from a specific demographic in a specific region that we choose, and it's in a specific time, lastly.
And it's going to be a different tenant as well, right? It's going to be
different tenant profiles, different geography, and it's just a completely different investment. In 18 months, you can predict where the market's going to be with relative success. Like 18 months out, unless there's a different pandemic, like something that's completely out of left field, you can really predict where it's going to be based on jobs, demand, immigration, blah, blah, blah. 6 years is a very different investment because nobody can predict 6 years out. We're talking about an election, a guaranteed election in the middle of it, meaning every 4 years there's election. So any investment above the 4-year mark, anything can change, meaning policy can change, government can change, banking regulations may change based on policy. So you have to be cautious and really think through your risk against time, your risk against geography, your risk against policy. And this is, of course, for the more savvier, bigger portfolio managers or people who own a lot of real estate. They really need to consider these things. And so a huge part of what I do every day and a huge part of what you do, Jas, every day. And I know we like to use simple terms and really keep it nice and clean. The coffee with Jas, the coffee with Simeon is a conversation, and it varies from the first time investor getting into a property to the first time home buyer to a student, all the way up to portfolio managers that have 50, 60, 80 doors in their portfolio. So depending on your needs, we take you down whatever path you need to go to. So
now, when you're looking at a pre-construction, either a townhome or a condo, what you want to look at, and some of the biggest benefits is the fact that as an investor, everyone here knows, and anyone watching on the other platforms, if you don't know, as an investor, you need to put down 20%. A total down payment of 20% is needed and that's a lender's requirement. But the nice thing with the pre-construction is that the 20% is laid out in installments. So there's some flexibilities. The longer, as Simos mentioned, if it's a four-year build, then that 20% is laid out a little bit longer. So it'd be 5% in 30 days, 5% in, call it 4 to 6 months, 5% in a year, 5% in 2 years. What that again gives you is that flexibility where you don't have to have the 20% down all at once. It becomes like a forced savings plan. It's nice because once you get into contract, that you're buying at today's value for something that's going to be built out from 4 years from now, 3 years from now, 2 years from now. But the down payment that you're actually putting down, the investment that you're putting out is going to be laid out. So if you go $500,000, you're going to be obviously putting down a total down of $100,000, but it's going to be in portions of $20,000. The other nice thing is when you look at a pre-construction is that you don't need to actually get a mortgage. Nothing's built. Title can't get transferred. There's always a little formality that needs to be taken care of from the builder's perspective, where they're looking for like a pre-approval letter. Our team facilitates that for you. We obviously want to make sure.
But you're not actually closing on the mortgage.
You're not actually closing on it, right? It's why, for me personally, it's been one of my favorite types of investments because of the fact that I'm able to acquire properties, not put all the down payment down at once, and I don't actually have to get the mortgage. Now, what I also can look at is I can actually look at doing an assignment later on. What that is, it's essentially the term that's used on the streets is flipping the paper. And so you have your agreement of purchase and sale, and I'm going to flip it over to Simos before it gets built. I get to take the profits. I don't have to pay the closing costs. So that's a consideration and definitely a benefit that you'd want to consider if you wanted to make some profit and not want to close on it. Now, something that you need to also make sure that you look at when you're looking at a pre-construction is the stuff that Simos mentioned, right? Like it's 4 years out, 6 years out. Your deposits, once you're in, you can't pull out, because even the assignment, it takes like about 2 years for you to actually able to do the assignment where the builder allows you to do it. So your down payment, that deposit, is tied up for a couple of years. So you always want to make sure that you look at that. When you're looking at a townhome, it's just going to be done quicker. You're going to be maybe 18 months, 2 years. I think it's actually closer to most townhomes are completed within like an 18-month period. Again, sometimes 2 years. You're able to forecast not only what the values are going to be, but you're able to easily forecast what the rents are going to be, right? Based on what we're seeing now.
And that's truly the biggest piece. So
yeah, go ahead.
No, go ahead.
I was saying, buddy, that when you're working out the rents, I think the biggest myth that we hear all the time from even our clients that have been with us for a while who haven't done a purchase yet or an investment in a pre-construction in that strategy is, well, like I can't make the numbers work. Well, first of all, don't try to make the numbers work. Just run the numbers properly. And what that means is you need to forecast. So if it's going to be built out in 4 years, you need to forecast what the rents are going to be in 4 years. Conservatively, you need to make sure that you're not trying to make the numbers work, right? And don't get, on a side note, don't get emotions involved. We need to make sure that the numbers in itself just work. And how we do that is we forecast the rents. We have an idea. History is a great teacher. If you look at overall what's happening with rents in the Greater Toronto Area, Southern Ontario market, you can start to see a pattern and then knock it down a little bit, right? Like if you see.
So just to that point, Jazzy,
Yeah.
we did a deal review for one of our excellent friends of the RC, Miss Stephanie Pinero. She's a client of ours here in Ontario.
She's probably here. Shout out to Stephanie.
Shout out to Steph if you're here, Steph. But I mean, talking about the numbers and making them work in emotion, it's so easy to get caught up. And Steph was in the middle of a multifam purchase. Can't remember if it was a 12 or 16 unit multifam in Kelowna. Obviously, I wasn't the one selling it, but all our insiders know that if they want a second opinion, they can reach out to us and take a look at the numbers. And I took a look at the numbers over 3 weeks as the due diligence was coming in. Nothing is ever as it seems in the beginning, right? So like little things and tidbits were creeping their way out of the worksheets, and she was getting emotional. So should I do it? Should I not do it, Simeon? I was like, take a step back. Take a step back. I'm not going to tell you to buy something.
Right.
Why are we even speaking in this tone? Like, why? She wasn't speaking rudely. She was speaking of it like she's grateful. But I said, why are you even thinking that way? If this isn't as it seems, the only thing we're going to do is drop the deal. Game over.
Yeah.
There's nothing to get emotional about. You have to study your numbers. We're going to provide people with numbers today. Don't take my word for it. I would never go to 500 people with wrong information, but don't take my word for it. Google it right after. Vacancy rate, Oshawa. Vacancy rate, Barrie. Average rental, 2-bedroom or 3-bedroom townhouse, Barrie. There is legitimate. All this data is out there, and you are able to build your pro forma. I was speaking to John from Montreal yesterday on one of my coffees, and he thought he has been feeling trapped in his market because the numbers don't work. Is that the only market in the world, John? Yeah. Step outside your comfort zone. Find where the numbers do work. There's no excuse for inaction, and there's no excuse for emotions. The numbers work in many places. You have to find them. You have to find your power team, just like this, and we go and we get it.
And there's Stephanie. I had a feeling she was
and John right before that. Sorry to pick on you, John, and sorry to pick on you, Steph. I love you.
And look, but what I like what Steph did there, and I can't remember if if you guys did close on it or she did close on it, but at the end of it, it doesn't. But let's just say, let's go down the path if she didn't.
Sure.
The one strategy that is probably the one that where we've seen our investors make the most money is just tying up the property at the get. You know what I mean? Like you tie up the property, and then do the due diligence.
Yeah.
Not do the due diligence first and then try to tie it up, because 99.9% of the time you're not going to be able to even have an opportunity. My kids always make a guest appearance. The good thing is that one of them didn't make a naked guest appearance today, and love you, Sai. And so tying up the property is probably, in my opinion, the best strategy, because then you can do the due diligence. So shout out to Steph for doing that, because then at least you get the opportunity to move forward with it. The next kind of option I want to speak about is if you look into a resale income property where it's already been built.
Yeah.
Where it's already been built. And one of the biggest benefits when you look at a property that's already been built is we can rent it out right away. Like, you can close on it tomorrow and rent it out the day after or the same day, and you can take advantage of principal pay down. And so that's something that I also like to diversify. I like to have all the eggs in different baskets, because now I know that I'm going to build up equity, not only through market appreciation, but it's going to be market appreciation and principal pay down. But you need to make sure that you understand that 20% is no longer laid out over 2 years or a year or 6 months, whatever it is. It's going to be due all up at closing. And so,
yes, but if you have the money, it's the only thing you should be doing.
And that's why we said that today is going to be kind of a menu of options, and depending on what's already in your portfolio, or what you're just more comfortable with, right? Because we have people here that are able to invest into something that's a resale right away, or there's other people who are saying, you know what, I want to lay out my investment. I don't want to kind of do it all at the same time. Look, and here's the nice thing, right? All these brunches have been recorded, and so if people go back to our first one about 5 weeks, I think we've been doing this for 5-6 weeks. Almost, I've lost count now.
It's awesome.
It's awesome. But what I like about the fact that it's recorded, because from day one we said that in my opinion, if you were looking into still investing in real estate during this pandemic, I would look at only 2 ways to invest. A, if you can get a rental guarantee. Okay. If you can get a rental guarantee, because then someone's putting their money where their mouth is in terms of the tenant paying their rent. And B, if you can get a long closing. Because if you can get a long closing, and you and I were blessed enough yesterday to be on a webinar with the one and only Benjamin Tall from CIBC. He's the guy in our country. He's the guy in our country, and he kept on saying to us that, hey, make sure that and understand that you want to buy some time with your investments, or have a rental guarantee, because at the end of the day, if the tenant moves in tomorrow, they do lose their job, because that can happen. At least someone else is backing up the rent payment.
You know what, just from Benjamin Tall's perspective, we should ask Chris. Chris is our partner. He's also the broker owner and broker of record of Royal LePage Signature in Toronto, one of the biggest brokers in the country. But he owns that interview. We should ask if we can share it with our base.
Yeah,
our people would get great value. So guys, I'll keep you guys tuned. I'll speak to Chris on Monday or Tuesday, sorry. And if we can share that link, there is invaluable data. Like, this guy is the Canadian economist, GOAT, like, not maybe, for sure. So, like, we respect his opinion dearly. This is where we get a lot of
greatest of all time. Just making sure.
The GOAT. But yeah, if we can share it, we will.
Yep. Sure. So we'll reach out to him this week. You know what, Simos? Let's take a couple of questions for now, and then we'll go back and jump into the couple of other strategies. You kind of already hovered over multiplexes, which to me are, obviously a great investment. I still think it's for somebody who's already has a few properties, just because I think you need to have a stomach for something that's a little bit bigger. Why don't you bring in some of the questions that you got? Because I see some messages.
We'll do that. And you know what? I don't think we need to dive into different investment types anymore, because I think as we go through the menu, we're going to cover off a lot of that info. That's going to come out on its own. So I like where you're going. Let's do the questions. Okay. Susanna Fletcher at 10:55 a.m. Oversupply of condos in Toronto and prices going downwards. No one knows how long COVID is around. Prices going downwards. Good time to invest in probably 6 or 8 months. Suzanne, that's good commentary. I'm not sure how much we can substantiate it. Unfortunately, there's a lot of newspaper headlines, but when you actually read the article, the MLS data doesn't really support the downward trend. There was a blog.to article that kind of showed prices going upwards and downwards in various micro markets in Toronto. There has been a downward effect, but we're talking anywhere between 1, 2, 3% up or down in different markets. And I can tell you the majority of that has nothing to do with the economy having an effect, but it has a lot more to do with people not being able to move out of their homes because they can't get trucks, or being able to buy and sell, meaning that sales volume is down 80%, but prices have held up 98% integrity through the biggest pandemic or the biggest global event in modern history. So, Suzanne, I would tell you there is not an oversupply, there is a massive undersupply. The oversupply that you might be seeing that actually has merit are the return of rental property that was short-term rental, Airbnb. STR back to long-term rental, LTR. And that's as a result of policy change last November in the city of Toronto, banning Airbnb on non-principal residences and coming back to the market. So we're going to see a glut of rental supply in that really downtown core for the next 6 months. But we would see that glut whether with COVID or without. It's going to take about 6 to 8 months to absorb, and then we're going to be right back where we were, is my prediction. And
we
Suzanne,
needed it.
You might be right, but I'm telling you from my industry experience and data, how I feel about it. Jas?
We actually needed those units, if you think about it.
Desperately.
Desperately, actually, you're right, because our demand was outpacing the supply significantly. And so, yes, there's going to be, I actually agree with you, Simos, in terms of the 6 to 8 month period. Specifically in the downtown core, because most Airbnbs, anyways, in the greater Toronto area, they all came back into the market in that downtown core because that's where people want to rent places. I mean, that's the place to be. And so we actually needed it. All the numbers have to all like Urban Nation, which is the number one statistical firm when it comes to rents and how much supply there is and how much supply is coming down the pipeline. We had him on our podcast, Mr. Sean Hildebrand, called him the human calculator. He really is. He's the senior VP there. And he was saying that the rental supply that's coming through, it's a drop in the bucket. It's a drop in the bucket because remember, even though borders are closed right now, we're still going to be on track to have 200,000 people come here in the next, if it's not 10 years, call it 11 years. Remember, you got to look at real estate as a long-term investment. If you're thinking about it from the perspective of buying something today and then flipping it next year and trying to time it like that, this is not the conversation. It's not even what we speak about because
we won't be your broker.
Exactly. I mean, you can't day trade real estate, but if you look at it in 10-year chunks, for the last 100 years in the greater Toronto area, on average, prices have doubled. I mean, we just came out of Vancouver. If you compare Vancouver went up like 35% in the last couple of years. I think that's too much too quick. But in greater Toronto area, take the last 40 years, you're looking at 7.3% year over year increase. And so the story in terms of immigration coming in and how do you spur on the economy?
But even Vancouver, Jas,
increase the immigration,
so high, it went up so high because it has outside factors. They're on the Pacific coast. Across their pond, there was a massive flux of immigration and capital making its way to Canada and out of China. So let's just call a spade a spade. The minute that China tightened up, they got affected. Yeah. Just like when China opened up, they got affected. So when you are susceptible to outside influence, you're going to have upswings and downswings. But you cannot tell me, nobody can say that Vancouver's on a great market. Vancouver is its own little Manhattan. You have the mountains to the back, the ocean to the front. You have this much land, some of the most blessed land in this country. I was just there. I'm walking through Stanley Park and it literally cuts your breath. It's so beautiful. Sorry, you want to live there. A lot of people want to live there. So there's demand. So through it all, the ups and downs, Vancouver remained the most expensive market in Canada. So if anybody wants to talk garbage, meaning, oh, it went up, oh, it went down, over time, Vancouver is a winner. Vancouver will always be a winner. And Toronto, again, we're talking about major urban markets that people want to be at. That's it. You're muted, pal. Jazzy, you're muted.
Just like Vancouver, we're landlocked here, right? In Vancouver, you got the ocean, you got the mountains. Here, we got the lake, and we got the greenbelt legislation that runs right across southern Ontario, which just restricts buildings. Like you can't build in so many parts of southern Ontario, and so there's a landlocked. We're kind of like on a real estate island, and that's why you always see demand outpacing the supply. Bring in another question, brother.
I got a question for you, and I'm actually going to combine Robin Thompson and James Uwe. Robin says, when selling it under assignment, do you have to pay tax on your profit? And James is asking, reassignment is the assignee shoulders the appreciation 100%. How's the appreciation shared from the assigner? How is the profit and the appreciation shared with assigner assignee? So here first and foremost, do you pay tax on your profit? And secondly, how is the breakdown of original purchase price versus selling price at the assignment? How does that break down?
So do you pay tax on your profit? The answer is yes, but I don't want to give you tax advice, but there is ways if you sit down with your accountant, and it'll be essentially there's HST to be paid on the profit of what you made. So if you made $100,000 profit, there's going to be $13,000 on HST. With that said, I've done this personally myself. If you sit down with your accountant, there is ways to get creative because the CRA is still like they're wanting to heavily obviously tax assignments, but they haven't really figured it out. And so if even when you sit down with your real estate lawyer, it's not going to be a conversation with your real estate lawyer. It's going to be a conversation with your tax, your accountant. And so make sure that you obviously get advice based on your specific strategy. But there is right now a 13% tax on the profit, which is the HST. You're paying HST on the profit. The second question.
That's in Ontario, by the way.
Great point, Simos. I was just about to mention that as well. That's Ontario. I'm not sure about how the other provinces work, but we can always put you in touch with people right across the country, guys. The second question, in terms of how is the profit shared in Ontario? If you're the original signor, so let's just use me as that example. I bought it from XYZ Builder, and now before it gets built, I'm going to sell it to Simos, and he's going to be the new purchaser / the assignee. Okay, all profits that were made, they go to me. I know there's another province or two where it goes to the developer, to the original seller. But in Ontario, any profit that's made, that goes to me. It's minus costs that the developer might charge you, or it's like real estate fees and lawyers' fees. So we got to work that into your pro forma, and we get really, really detailed with any of our assignors and assignees. But all profits go back to the to the assigner, me, in that situation.
Amazing. Thank you, Jazzy. A quick question here from Oz. Is London, Ontario a great market? I'll pick this one up. London, Ontario is a phenomenal market, and we have probably the most phenomenal team down there. One of our very own, Rosalind, lives and works the London market, as well as Prime Real Estate.
Shout out to Justin.
Cow has been family to us for well over 5 years. We've exchanged clients and taken care of clients hundreds of times over. If you're looking at the London, Ontario market as your destination for your investment, we can put you in some of the best hands you've ever been in. So now, I truly mean that.
Now, and you mentioned it's a good market, and I agree with you, Simos, but here, man, I mean, you're sitting with people that are obviously biased about the greater Toronto area specifically. Right?
Yeah, I'm trying to be nice here.
But yeah, I know, born and raised here. All my personal investments are here, and like 80% of your personal investments are here, and 90% of our clients' investments are in the greater Toronto area. The reason I make mention of this, guys, is because when you compare, like I know you can get a property in London for $400,000, maybe $300,000. Let's just work with $400,000. Here in Toronto, greater Toronto area, you might be paying $600,000. And when you look at it, purchase price difference of $200,000. It scares a lot of people, and I understand it. It scares a lot of people because and Simos, you and I together, we take approximately 400 coffees a year with clients. So we get a lot of data to what you were saying. And so that scares people up front. But as an investor, you don't need to get caught up in the purchase price. You need to get caught up in how much are you actually investing? How much cash is leaving your pocket? And so in that $200,000 difference, you're looking at $40,000 because it's 20% down. There's strategies, as I mentioned, that you can get that $40,000 out, pay that $40,000 in installments. So now it's like $20,000 a year. And then when you start to look at it from that perspective, Toronto will always, Greater Toronto, and I love London, and I love Justin, and I love the guys in Windsor. I love, like, the rest of the country, all of our savvy realtors. But I will tell you, and please, like put it in the Q&A, but when you compare it, Toronto, to any other place, Toronto will always outpace any of these areas in market appreciation, as well as, and as an investor, you're a business owner, so you got to look at your customers, right? I always have an excess amount of tenants that I can rent to. My customers, I have a lot more in the Greater Toronto area, and the tenant profile, in my opinion, just solely based on the good-looking Indian guy here, my opinion is that
100%. I respect that.
The fact that I'm good-looking?
Yes.
Okay, thank you. The fact that, yeah, okay, and the fact that the jobs are here. You got people who are going to pay more. You don't really have like professional tenants, as we like to call them, where 15 years, I can count on one hand the horror stories. So you just, like, I think the overall investment is actually just better in the Greater Toronto, period. The numbers, the returns are higher, and it's consistent over time. Like, I'm talking 100 years.
I just think the tenant profile is stronger here because you're going to attract people that are making more money, typically have a more solid foundation, and the price of entry to the GTA from both an owner and a tenant perspective is just so high. So you just get a different tenant. Anyways, I definitely agree. I'm going to stop the questions for a few minutes.
Okay.
There is a few really good questions here. We're going to come back. What I want to do is it's 11:30. It's prime time, meaning that some people might have to take off for lunch and kids, etc.
Yes, I agree.
I want to rip through the opportunities because we were asked to bring these opportunities, so here they are.
We'll go high level, and just keep in mind to everyone, and so I apologize for cutting you off for Simos there, that everyone's going to get an email approximately around 2 p.m. It's going to be a link. You get all the information, all the performance, the floor plans, the pricing. There is a couple of resales in there as well. And so you're going to have the opportunity, and we should start off by saying every single opportunity that you're going to see the performance all hover around a 25% year over year into return on your investment minimum. So right around that 25%.
And also, don't think for a second, like, go in there. The minute you click, you have access to all the data. Right so away. You're not in a rush, buy now. There's none of that nonsense. We're going to go over the opportunities. If they're right for you, smash it. If it's not right for you, if it's not right for you, don't. If you have questions, ask them.
And there's reservation forms in each of the folders. Remember, I spoke about tying up the property first. Make sure that you get it. There's only a few in each category that we're going to be talking about. You tie it up. The way that we've been doing this for 15 years is just the fairest way to do it. It's first come, first serve. We timestamp the reservation forms that get emailed to us, and you'll just make a note of what you're looking for. That's not you buying anything. That's you reserving it. You're going to get the first call from the Greek guy that's sitting next to me here, or myself, and we'll reach out at that time. Let's go high level. Let's start with Wellen, my man.
Let me ask you a question. Do you want me to share my screen for 10 minutes?
Yeah, sure, buddy. Go ahead. Let's go.
Why don't I do that? Let's see what it looks like. To everybody watching, I know there's about 250 people right in front of me right now. If I share my screen and you don't like the fact that we're squished to the side and you're looking at the screen, say so. Because we can just talk about it, or if you like it, just let us know. But you're the boss, audience. Okay, so we're at the REC Canada website. So if anybody here, you're going to see it in your email, reccanada.com for sale.
/for sale, .com/for sale. You'll get the access to this.
So you're going to start,
Awesome. Go ahead, buddy. Woodland Heights.
Okay.
This is one of the ones that I'm very, very, like, I'm excited about all of them. Here, I know I speak about the rental guarantee we spoke about. This one here is in Barrie. There's semi-detached homes, duplexes, and you have a 1-year rental guarantee from the developer. So they're putting their money where their mouth is. I always make a joke and say that I hope they don't even rent it out for the first year, because then no one's going to touch my unit. Obviously, they're not going to be out of pocket for a
These
year.
are rented. These are rented.
And these already are rented as well. I believe there's 8 units here.
So there's 8 units. They were just completed. These are legal duplexes. All paperwork filed with the city, stamped and approved, and they're
very important.
tenanted,
Very important.
Qualified, and we're talking $3,800 a month gross income in Barrie today, bro.
Okay, and these are built, as you mentioned. So this is what you would want to consider. Their purchase price is $750,000. Okay, they're built already, so we can close on this within the next 10 to 15, call it 30 days. You're going to make it conditional. We're going to make any agreement of purchase and sale conditional on financing, conditional on inspection. We can do virtual tours, video tours. You can go, like, we're really set up to make sure that we show homes properly during this pandemic. So just so you understand that you can get in and we can show it to you. We can get it inspected. They're brand new. But again, 1-year rental guarantee. You can push the closing date out further as well if you need a little bit of time to come up with the 20% down. Simos, maybe you can. I think we can push it out to about 60 days. I believe is kind of the maximum that we can.
For sure, depending on the circumstances. Like we are going through where government services are limited, where lawyers availability, etc. I mean, when you're buying resale, the quicker, if you're buying it, the quicker you get into your portfolio, the quicker you see the result.
This is in Barrie. I mean, Barrie is one of our.
GO train.
2 minutes from the GO train. This is why, and they're brand new and they're duplexes, and I mean, they wouldn't have even passed our sniffy test if they weren't legalized and regulated and done all with permits.
And Jas, if they just go, so the thing is, this is what I want to do, because I want to rip through these. I want to hit the highlights. Every single question you may have from a detailed perspective is included in the due diligence folder that we built. If something that you think of is not there, straight up, email to info. We can get you everything you need in 2 seconds flat.
And Simos, maybe you can just take your mouse there, buddy, for a second. It's that email address. You just literally put in an email address. You press get info, and you go right into the package. And you'll actually have the opportunity to see all the opportunities that Simos is going to scroll down on. What do we got next, buddy?
Was there one thing? No, I think you covered it. Good. Okay. Yeah. So this is again, just to cap this off, resale, $750. Rental guarantee. This one has big cash flow, $300-400 a month. From a cash flow perspective. So the guys
Simos, it's actually in the high 400s, low, like it actually tops $500 because we actually threw in when people look at the pro forma, we put in a 1% vacancy rate for the first year, but there is no vacancy because there's a rental guarantee. So it's over $500 net cash flow after all the expenses are paid. You're gonna love this one because of the fact that after expenses, you're still seeing $500 a month.
So this one's resale. Remember, you're going to need 20% to close as an investor. You're looking at massive cash flow, guaranteed rent, taking diminishing any and all risk. They're brand new homes and they're tenanted. So if there was anything more turnkey, I'd have to buy it for you. Very good.
I like that one. 15 years, I haven't heard you say that one. Good one.
Well, like let's be real. So the last couple of weeks, like I'm the guy who I have to go find the opportunities and bring them into the REC. So Jas goes, I want turnkey, I want rental guarantees, I want this incentive, I want that incentive. I'm like, okay, bro, like let me see what I can do. But
well, here you go. Here's another very passive, very passive investment. Notting Hill, Etobicoke, truly one of my favorite areas in all of Greater Toronto area. Born and raised here. I spent I'm going to say close to 29 years all around Etobicoke, but this is right by the new Eglinton LRT that's coming and being constructed. This has been, this is going to be built for 2024. Master plan community right at the corner of Eglinton and Royal York. South Etobicoke, one of South Etobicoke's, like, best intersections. You're really kind of at the core of South Etobicoke here. Built in, as I mentioned, 4 years. So now this is something where you're going to have 20% down as an investor, very, very passive, 20% down as an investor, but it's going to be laid out, and you'll get all the information when the deposit, how the deposit structure is laid out. But it's essentially 5% now, 5% in 90 days, and then so on and so forth. Once this gets built, and this is what makes it very turnkey, Simos, and everyone who's watching, is that REC is going to rent it out for you and help you manage it for 2 years at no cost. Now, why would we do that? Again, because we love to make everything turnkey and easy for you. We like to remove the friction, so to speak, and we're also very confident. We're very, very confident that our team is going to be able to rent this out for you and manage it for you. Now, you're not going to see $500 a month positive cash flow like you've seen on the others. This is 50, 60 bucks, $100 a month, nothing to really write home about, but it's a different type of play in your investment portfolio. This is equity. You want to build the equity. You want to buy this. You can assign it. You can flip it, but our macro thesis on investing is buying and holding and just keep on flipping to yourself or refinancing over a period of time. So a little different than what we just spoke about in Barrie. But again, this is something that fits into people's portfolios 200 times a year with us because of the fact that you don't need to also qualify for a mortgage right now. Like, you don't have to get a mortgage. We'll take care of the qualifications of it.
And what I wanted to say here, the big play is who the builder is.
Yes, talk about that, my man.
Because we were talking earlier, what were the important focal points on pre-construction? Yeah. Who's building your building is massive. How well capitalized they are. What experience they have. On the screen right now, do you guys see LanteraDevelopments.com?
Yeah, so I'm looking at the Wellesley that they did. I'm looking at, I mean, these guys are.
If I click on communities here, Lantera, it's again, we're talking about the Mandible family. They own at least 6 massive development companies. Medallion, Oak Tree.
I don't think there's anyone bigger than Lantera, in all honesty, Simos, right?
It would be hard pressed if there were.
They did everything in Jurassic Park. They did everything in Maple Leaf Square, ACC, Scotiabank Center, whatever it is now.
So they're huge. That's a big part of the story. The fact that we have access to this product is an accomplishment from our perspective, because they work with a very select group of people who have qualified clients and who can get their buildings financed and sold quickly. In this case, you're going to be part of that new Etobicoke, that Eglinton and Royal York, where there has been a massive density intensification, because right next to you are like multi-million-dollar homes in pockets all around there. And here you have an intensification and density coming up with some of the biggest developers in the country taking part in it. So Lantera being one of those guys, you are being part of a revitalization and intensification of an entire neighborhood.
Including the LRT. So very important. With the Barrie project we spoke about, we said we have 8 units. This one's a little bit different. We probably only have about 4 to maybe 5 units, bachelor units, 1 bedrooms and 2 bedrooms. When you're in the reservation form of this, just put down a couple of options in case we can't get your first option. We will do our best to try to get your second or third option here, because these allocations, what the builder does with pre-construction is they give us some units, and now the next set of units that they give after this are going to be increased in price. But that's how you as an investor win. If you get involved into this sooner than later, and in fact, we wouldn't even let you get involved in something that's in the 3rd, 4th kind of phase.
Because we'll take you somewhere else in the 1st.
We'll just take you back. Exactly. And so
no emotions, Jazzy. No
Yeah, none,
emotions.
none. I get a lot of emotions at home already, my man. I don't need it. I don't need it in my real estate, buddy. But just understand that here we have about 4 to 5 units. What's next, Ben?
Okay, so we started with Woodland Heights, which is a buy today, close today.
Yeah,
Resale investment, 20% down.
4
Notting
years from
Hill
now.
is 20% down. We're just giving a quick summary. Notting Hill is 20% down over the next year and a half, 2 years. You're looking at a minimum 4-year out minimum, especially given the current construction and permit environment. So it's a long-term hold. You're going to be putting that money that you put in the first and second year. Although the pro forma says 25 to 30%, that's assuming that it's closed and performing. The thing about pre-construction, and I'm just going to give one last point because a lot of people miss
Very
this.
important.
If you got to put 50 grand in year one, so 10%, you bought it for 500K, just for an example, you put that 50K year one. As the market continues, you haven't property managed, you haven't had a single expense. Okay, you have that 50 grand in. If the market went up by 3% in Toronto, which it's never gone up 3%, it goes up 5, 6, 7. But let's say it goes up 3%. 3 times 5 is 15, that's 15 grand. On your 50, that's a 25% return. 25% return in year one for doing nothing, for picking your nose.
You wrote a check.
You wrote a check. So year two, you put another 25, now you're a total of 75. Now it's gone up 30,000, 35,000. You're up to 35, 40% return per annum. By year three, you're actualizing numbers that are astronomical, okay? So there's not just the 1-2 ways to win. Look at it objectively and realistically. The aggregate return is ridiculously high on every dollar spent based on its time value of money, okay? Moving on. So Notting Hill we covered. Sparrow Meadows. This is one of my favorites. Why don't you hit it off the bat, buddy?
Well, Sparrow Meadows, we're going to be looking at a partnership here with our friends that a lot of people know that did the financing on this as well. Townhome. So we spoke about not waiting and not actually needing that 4-year play like we are on Notting Hill. Here, this one is approximately, we're looking at about 2 years, as well as price points, freehold townhomes, price points as low as 422, 469. Correct me if I'm wrong, Simos. Here we can also do this with $45,000 down, I believe.
Yeah, so this is Mountain View Homes. Of course, a lot of our people are going to know Mountain View Homes because they're the Niagara region's biggest builder. Mm-hmm. So we have one in the east. So we have 2 developments left to talk about. One is to the east and one is to the west. Sparrow Meadows is Mountain View Homes in Niagara region. To the east, which is the next one, is Graybrook and Marlin Springs, Symphony Towns in Oshawa. So in this one, we're able to, in Niagara region, Mountain View Homes, okay? They've allowed us to bring in our clients now with 45K down over 12 months. Not 45K down today, which would have been a joke already. But 45K over a 12-month period, breaking it down to like 4 or 5 payments, like of, anyways.
Now, keep in mind as an investor when you close, you got to come up with the rest to get to 20% down. But you're tying up these properties, and as Simos mentioned, like when you're breaking up $45,000 in 4 or 5 different payments, and the values are appreciating. Like if we showed that to you on a pro forma, you would think we're crazy. And so we like to show our pro formas with the full down payment, but understand that you're only putting down like 5,000 now, and then I think it's 10,000 in 30 days. It's really broken up. It's really staggered out as well. Here, you'll be able to have your rental income cover your expenses as well.
So I have a piece of homework for every single person on the line right now. And this is recorded. It's going to be sitting in our YouTube. It's May 16th, 2020. We're selling freehold towns in Welland, Ontario from 422 to 469. That's the most expensive is 469, cheapest 422. Every single person here, I implore to if they think that on May 16th, 2021, this is not going to be worth 475 to 5 1/4 once it's built or once the construction is started and they're sold out. Again, be the guy who says no, it won't be. But I want you to go on the market today and find me a complete brand new townhome that compares to this for the same price you're buying new for next year. I want people to understand what it takes to find and create these deals. So this is a tremendous way to purchase and lock in a price, start making money today without having to get a mortgage, without having to do anything other than be friends with the right people.
No tenants, no toilets, as we like to say.
Nothing.
But again, this is like, I love the fact that we brought the menu, right? It's kind of a la carte. You can choose what fits your portfolio. And I love the fact that we're going from the west, and now we're going to go all the way to the east with another townhome complex in Oshawa. Why don't you bring that one up there, buddy?
To finish off Welland, I just wanted to mention the vacancy rate. The vacancy rate 5 years ago was at 4.5%. Since the madness in Toronto of the population blowing up and kind of the exodus of downsizers, and since the new GO train line was completed to the west, a lot of young families and a lot of downsizers went out, meaning the market has appreciated, and the actual vacancy rate in Welland today is under 3%, 2.4. In Welland, Ontario, brother.
Well, and look, but what happens is it happens from purchasers, people like end users, and it happens with tenants as well. You drive till you qualify, right?
Right.
And that's what we've been seeing for 15 years. We also have data going back to 50 years, and it's always happened in all major cities. I mean, Toronto's not the only person this happens to. If you look at Manhattan and New York, it's why prices in Brooklyn and Queens and all these other places around Manhattan have increased significantly, because of the average person just can't live in Manhattan anymore. Now, the average person can't buy in Manhattan. It's why you start to see them renting more.
That's right. And going back east now to our friends from Marlin Spring and Graybrook. Exact same timeline, similar product, a little bit, I would say, more urban design in Oshawa. Obviously,
can you scroll down? Sorry, Simos, because you're still on Spiramotos.
Yes, 100%. So here, clearly, you're going to see a little bit of an upper end to it. It's not going to have that country feel to it. It's going to have more of a city feel. Oshawa, I mean, North Oshawa, for those who know it, have come a long way. Oshawa used to be kind of the armpit of Ontario. They used to call it, just like Hamilton, the Schwa, and all these things. Oshawa is becoming a world, in my opinion, because we've sold, like, half our team works Durham, and they're selling millions upon millions of real estate in Oshawa. And Oshawa is not the Oshawa of the 1970s and 80s with a GM plant and drinking beer and pickups in the back at all. It's become an educational center of Durham. There's a university and the International Technical College, and
you have GO Train. You have GO Train there.
Durham College. So you have two major campuses next to each other. This is within minutes of the campuses and all the new areas. Transit to the city, trails, lifestyle. We're talking like it's just a different place. We've sold a lot of projects in Oshawa in the last 5 years. This is kind of like another little crown jewel. And of course, it's brought to us by our friends at Graybrook and Marlin Spring. So a lot of our clients here may have actually invested in the LP here.
Yep.
And they're going to have a chance to go full circle in their investment. So they're going to buy first and buy themselves out of their own LP, making themselves profits on the back end and profits in the front end. So
3 weeks ago, we brought a project from Oshawa. We sold out right after the brunch, and then we realized, okay, people are still asking for this area. If you guys go back to the brunches, probably the second one or the third one, I can't remember, don't quote me. We did release a project in Oshawa, but that's sold out. And it's hence why we try to reverse engineer what everyone's looking
for. So legit,
right?
This is 2 minutes from that one.
Yeah,
that one was a purpose-built student housing.
Exactly.
And this is targeting young, like you can obviously have students in it, and they will, but this is targeted to the young family, to the young professional. The price point is in the early 500s. Again, from a capital perspective, you're looking at $65,000 over the next year. Again, it's just it's structured precisely the same as Mountain View in the West.
Yep.
But it's at $65K, not $45K, and the price point's about $50,000 to $75,000 more than the Welland, Ontario in Oshawa.
And for good reason. I mean, you're going to see slightly higher, slightly higher appreciation here. You can also choose from 2 stories or 3 stories. The 2 stories, sorry, are a little bit more expensive than the 3 stories, but both are going to be very easily rented because vacancy rates are super low here as well. So we're very, very confident about rents in the Oshawa area.
Oshawa is at under 2%.
Yeah.
Not
Look,
under
I think
2%, under 2%.
But you know what? We hear a lot. We see it a lot, as you mentioned. Half of our team works the Durham area. Is the amount of multiple offers that we see when it comes to rents in Oshawa, Ajax, Whitby, because there's just not enough good, clean places on the market.
Yeah.
You just don't see them. I mean, this is brand new. You can tell, right? I mean, you can tell this is going to be a little bit more upscale than what you're seeing in Welland. But Welland's a different target. You're also getting in for $150,000 less than you are here. It all depends on what fits your portfolio, guys and girls. Like, it really, really comes down to what your current situation is. And if you're not working right now, I want you to still call us and ask us questions. I don't want you to look at these investments though. Let's get your foundation taken care of. Let's make sure that you're good from that perspective. But I know 85% of people are working.
Comparing the 2 towns, bro, the 2 towns.
Yeah.
So in Welland, you're going to have, over time, you're going to have higher cash flow in Welland because of the purchase price going down and the market appreciating a bit faster.
Yeah.
But from an equity perspective, in Oshawa, you're going to have that, in my opinion, significantly faster growth in equity and appreciation.
Mm-hmm.
So they both cash flow well as it is, but over time, if you're looking for that slow replacement of income, take a look at Welland. If you're looking at still building wealth in the back end, look at Symphony. Look at Oshawa.
So everyone, you could go right now if you wanted to, reccanada.com/for sale. reccanada.com/for sale. You can get into the page that Simos was just showing you, put in your email address. There's no cost to doing any of that. Click that button below the email address and you'll go right into the Google Drive that will give you all the information. We have what the next steps are. We have the reservation form, the floor plans, the performas, the incentives, everything is sitting there.
You're not jumping through hoops to get to the information.
Yeah, that's just not what we do.
So you click more info, you open to the Google Drive. So
automatically.
We'll have it now.
I love you too, Lori.
Not this. Yeah. Hi, Lori.
Yeah. But on top of that, we will be sending out an email around 2 p.m. Eastern just for that link to go to this website page. So you can go there now, or you can wait until the link comes, whatever's easier for you guys. And as we mentioned, Simo said it a couple of times, that what you do is you reserve, and then we get on the phone with you to make sure that this even fits your portfolio. We'll help you through that, walk you through it. Anyone who's new to our wheelhouse from all the other social platforms, the YouTube, the Facebook, the Instagram, speak to somebody in our community. Like, talk to them about Jas and Simos and REC, Tyler, Bobby, Laura, everyone. I think we'll get, knock on wood, I think we'll still get some outstanding testimonials because they know that we take it really slow. There's no rush for anything.
You want to hear a cool story?
Sure, buddy.
Okay, 3 nights ago, I was on your nightcap.
Yeah.
Jibber jabber, jibber jabber.
Yeah.
By accident, my finger slides on my phone, and I go to the next person who was live, which was Austin from Rise Network.
Oh yeah.
Okay.
Awesome.
So I'm there. Like, I accidentally went from yours to a different live. Okay. So I'm in there and I'm like, hey, what's going on, boys? They're like, oh, Simos, what's up? I love you. I was like, love you guys. I hope you guys are doing a great job. Austin goes on a shout out and says, oh, if you're looking for a real estate, like they were talking about Windsor at the time, but if you're looking in Toronto, there's nobody, blah, blah, blah. So somebody hits me with a DM, like a direct message. And I'm like, well, yeah, man, if you want to talk, like, yeah, just go to callwithsimos.com and book your call and we'll talk.
Yeah.
Bang, 2 minutes later, I see a call with Simos lined up on my calendar. I speak to him. He goes, and I thought, like, again, like, that's it's millennials. It's a millennial investment little meetup group. And I thought it was just going to be questions. You know what I mean? Like, help somebody out, that's what we do. Doesn't this guy turn out to have already like 3 or 4 triplexes all over Etobicoke? Hear me out. Him and his girlfriend come in. I meet with them in person, social distancing. I make them coffees. This is my first coffee since the whole pandemic.
Right.
In person. And they came from Instagram, from my mistaken swipe, savvy investors. Property owners, but not savvy investors, meaning they've never focused on it, is what they told me. We want to learn how to do more. We start diving into it. Don't these guys run every property room by room and have the biggest cash flow I've ever seen in my life? I was like, what? Like, are you here for advice or are you here to teach me something? Like, that's what I said. They're like, what do you mean? I was like, you guys are running this thing like a machine.
Yeah.
Like a cash flow machine in the middle of the city. Anyways, what we went over with them, and now they're in our wheelhouse. And I hope Kevin and Tinson, if you guys are here, raise your hand. A big shout out to you. It was a pleasure meeting you. And I wish you the absolute best in your future. We're going to do a lot of work together. They're looking for diversity. They're self-employed, so they're having a tough time with financing, number one. And number two, they're looking for diversity. And when I said, I was like, just hop on the brunch tomorrow. We just met. I'm not selling you anything today. Let's get to know each other. Let's have a couple dates. So just go on the call. So amazing couple. A big shout out to Kevin and Tinson. And you never know where people come from. You never know how you meet people. But what I do know is that people are thirsty for knowledge. They're thirsty for good deals. And there's a lot of good people doing great work out there. So I want to just say a big kudos to every single investor that's slugging it out on the street, day in, day out, COVID, no COVID, collecting rent or not collecting rent right now. Just a big shout out. Like, we're going through this and we're here discovering and participating in opportunities. So it just brought me back in. You know what I mean?
Yeah, look, I mean,
there's Kevin. There's Kevin right there, man.
Shout out, Kevin. Welcome to the REC family. Look, investing right now during what we're going through is not going to be for everyone. You could start to think about possibly, especially like if you're not working, this is just not for you. I strongly believe that we need to start looking at your expenses. We need to start looking at a side hustle. We need to start looking at where you're going to be working, not investing in real estate. That can wait. You cannot build a home on a swampy foundation. If you are working and you do have capital to deploy and you're thinking about, hey, like, where can I invest money and get returns? We want you to look at all these opportunities, and if some of them make sense, great. And if none of them make sense, great. Like, we'll just wait. We wait, and we wait until something fits your portfolio. We do believe that these opportunities, because of the incentives, and that's what we're always looking for. We're always looking for what incentives, can we get for investors? That's the most important part, because location is location. You're not going to be able to pick it up and move it anyway. So,
yeah, and all the incentives that we pick up, bro, they're not just incentive. They're there to protect you, to mitigate you from unforeseen circumstances, both in your personal life and business life. Yeah. So when you buy a condo that's closing in 4 years, nobody knows that you're not going to go through life circumstances that could be devastating. If that's the case, you assign it. Yep. And there is no penalty for that assignment. There is no taxing that assignment. If it's a legit life circumstance, not a sale for profit, the government helps with that. Yep. So anyways, going with where you were going, I'm actually very proud of us. We were able to go over four opportunities in 25 minutes, which is a record for both of us.
It's true. So guys, if you want to stick around, Simos, why don't you and I stick around? Because I know I see a message coming through from Tyler that people already have questions that have went to the website. They have some questions about actual specific performance. So I'm good for another 5 to 7 minutes. If you want to kind of rapid fire questions that both of us can kind of just get answered, I want to bring so we can bring a little bit more value to everyone. But if people here need to leave and go for lunch and eat, please do so. You'll get the email or go straight to the webpage yourself. Okay, so I'll start with I'm just at the bottom here. Ramon Costa, are you guys doing a rental guarantee on the Welland Townhomes? Rental guarantee on Symphony Towns, is that offered by REC? Those are not rental guaranteed properties. Those are in AAA markets where the demand is high enough for us to be comfortable. The rental guarantee that's offered in Barrie, Ramon, just so you know, is offered by the developer direct with leases in hand. So you're not going to have any issues there. The ones that are built out 2 years, we don't have a rental guarantee. We only have the rental guarantee on the product that's built already. Yeah.
So when
And
you're
then,
going for financing, you'll be able to use both your personal covenant and the income to qualify for the mortgage today. So you'll be good.
And on Notting Hill, because it's like where Jazzy grew up, we are going to be renting it out for you and managing it for you. It's not a rental
Well, that's
guarantee.
all of them.
Yeah,
So
I wanna make-
Oshawa, Welland, and Notting Hill.
yeah,
So there's no rental guarantee, but proper like tenant placement and
and
oversight.
property. Yep,
In oversight is us, Ramon.
yep.
If
For
we
2
didn't
years.
believe in the product, we would never take this on.
For 2 years at no cost.
No cost. Okay. Anonymous attendee says, regarding pre-con, what if I have the down payment, but the bank will not qualify me? Excellent credit score also. What type of qualifications do you do? Well, Anonymous, I can tell you right now, you don't have a good broker in your corner. If you have excellent credit score, you have the down payment and you don't qualify, you need a little Simos and Jas in your life. We'll hook you up.
Just email us info@REC Canada.
We'll connect.
I don't know if you have anonymous@gmail.com, but we hope we get to see who you really are someday.
Take your mask off, Anonymous. Take your mask off. Johnny
Well,
Alves.
no, you can't tell people to take their mask off right now.
Oh, yeah.
Just saying.
Where's your mask? The REC mask. Anybody that wants an REC mask, show us an email. I'll be right back.
I'm trying to look for mine. I don't know where
I'm
mine
going to look for it.
Bobby, Tyler, can one of you guys come in and help me out right now while Simos does his thing? Get me a question, throw a question at me. I want to bring value. I'm here. Bobby, Tyler, one of you guys come on and can you guys go into Q? What's up, Bobby?
Hey, guys.
I want you guys to say hi to
COVID
Mr.
beard.
Bobby. He has the COVID beard. I actually think it looks better than you not having it, brother. Welcome. Everyone give a big shout out to Bobby Puim. He's our director of operations for all things kind of our team and everything that happens here at REC. Bobby, go throw some questions at us. Simos went to go get the REC mask.
He looks so good in that mask. I need one badly.
Way better.
Even just to cover this up. Yeah,
100%.
exactly.
100% he looks way better with
Thanks,
the mask.
Bobby.
Well,
Awesome. So the next question down the line, guys, was from Johnny Alvarez. Our concern is when we see deals where the biggest portion of ROI is passive appreciation, not cash flow. This is risky. What is your view on this? And I'm going to back out, gentlemen. Thanks for having me.
Love you, my man. Thank you for coming on. Look, Johnny, I think the name was Johnny A. First of all, you have an opportunity that you can look at, Barry, that has $500 positive cash flow after all your expenses. In terms of where all the money's made in market appreciation, I just don't see why you think that's a bad idea or it's risky. It's not risky if you hold on to it because we have so much data that the values are going to go up. It's risky if you're thinking, okay, I'm going to buy this and your only objective is to flip it in a short period of time. Then I'd say, don't do it. Don't touch it. You're right. I agree with you. Don't touch it. But if you're going to hold on to it, I'll bring you 10 people who've had made hundreds of millions of dollars just with that strategy alone.
So I think, guys, you hit that nail on the head. So Johnny Alvarez, when you're going after passive appreciation in the long term and not cash flow, you're especially in a pre-construction, it's a speculative investment. But the due diligence on a spec is 100% based on infrastructure growth in the market, job sector, etc. So if you want to speculate in Muskoka, you're the biggest fool in town. Because nothing other than recreational use reigns in Muskoka. Yeah. But if you want to speculate on the tech sector in downtown Toronto right now would be very smart. So because there's a massive growth, there's explosive growth. So
or
you have to take different considerations into your
immigration. Yeah.
Yeah. So it's just different consideration and different technique. So this is anything you do when you're looking at equity, you're looking at a 5 to 10 year play. If you're looking for cash flow, it doesn't matter. You could buy it today, sell it tomorrow, buy it today, sell it in 5 years. The cash flow play, the equity won't be there, but the cash flow will always be there. It's just two different styles, bro.
Why don't we pick a couple of more questions, Simos, and then we'll answer all the other questions.
Where's beautiful Bobby? What happened to him? Am I taking over?
Oh, where did beautiful Bobby go? Why did he leave?
Beautiful Bobby.
All right, I'm back.
All right, Bobby. I'm back. Bobby, you're going to pick the next 3 questions. You do your thing, brother.
All right. So from Christian Ratcliffe, would you personally invest in every pre-sale opportunity that you pitch if you had unlimited access to capital? I think I just love the question, right?
I do like the question. So I'll take the first part of it. Would I invest? Would I purchase? Sorry, would I invest in all the ones that I look at? No, because I don't. I want to diversify. I want to diversify, and I need to make sure I get the mortgages. I can qualify for all these. We only really pitch about 10 or 11, but I wouldn't do it in every single one of them, only because I want to personally diversify. So I like to have eggs. You guys have heard me say this. I want to have eggs in all different baskets. Do I believe in the projects? I believe in it so much that there's one person from either my family, Simos's family, or our company that would invest in something that we pitch. Otherwise, we don't like to pitch it, period.
So as Jas's wife will tell you, he's a bad listener. He missed the fact that we have unlimited access to capital. So because I'm a better listener than Jas, if I had unlimited access to capital, I would not only invest, I would buy it out every single.
I'll buy the whole building. I'll buy the whole building. Forget a unit. And I do apologize to that, Christian. Sometimes I don't catch the last part of it. But if I unlimited capital, I'm buying the whole building.
No, I'm joking. We literally buy at most of them because they're so ridiculously lucrative, excuse me. We participate in way too many opportunities. And when I say we're dangerously leveraged in real estate, Jas and I, if somebody would tell us to maybe listen to our own advice, because we go a little bit too far too often, meaning we buy a little bit too much real estate that's being offered. So Johnny A, Christian Ratcliffe, we would buy everyone if we could. Beautiful, Bobby.
Awesome. Thanks, guys. That one's a hilarious question. I just love it. Unlimited capital, what would you do? Everything.
Everything.
Guys, from George Clark, have the Airbnb units that are selling, are they then selling price plus HST?
No, because they're not commercial units. So these are residential investors who maybe paid too much because they had the little business plan of Airbnb. If you go back to our YouTube library and you look at my comments on Airbnb before the legislation passed, actually 2 years before the legislation passed, it pissed me off that people thought they were real estate investors with an Airbnb, because you're not. You're a business owner. And as a business owner, you should be doing different due diligence than a real estate investor. If you were an investor, you would know that you would be cash flow negative by $1,000 a month if you weren't operating as an Airbnb. You fool.
And Bobby, it's interesting that you asked that question too. You're both. You're a real estate investor and an Airbnb owner, and you know that you run, like, as when you put your Airbnb and hat on, then you go to Costco and go get what you need for your place. As an investor, you manage them yourself, but you can also, like, you'll have somebody else manage it, right? And so you obviously play both. How do you find it?
Yeah, I mean, like, look, I love my Airbnb units, but it's a strategic play to be in multiple aspects of real estate over time.
No, but it's a business, Bobby.
It's totally a business. 1,000%, it's a business.
Inside your real estate investment, you're running a business.
Yes.
But if you bought that property at a specific price that is only working on Airbnb, you're a fool, because now you bought a single-use property. It's like buying the drive-through on the highway that can only be a Wendy's.
Exactly.
Let Wendy's build their building. But if you're a landlord and you build what looks to be a Wendy's, nobody else can use it, bro.
Exactly.
So,
yeah, and I mean, we use this as a supplementary thing at a fourplex, right? We're already cash flow neutral on 3 units, right? It's supplementary at that point to run that small business to increase cash flow for the remainder. Awesome. So you're totally right. Now, that being said, right, for the purchaser of those condo units, they don't sell price plus HST, but there is a strong chance that the government of Ontario is going to tax that seller as having run a business out of that Airbnb, and they're going to owe HST on that.
I think there's a good chance. I think there's a good chance of happening that. I think there's a good chance.
Be very careful. Absolutely.
Yeah. Hey, they got to make their money back some way, somehow, right? It's going to come through taxes like that.
No, but Jazzy, this is why we always say policy. If you're not following the news, if you're not following what's happening around you, you're always going to be left the fool that, I had no idea. And ignorance is not an excuse in real estate investing or any type of investing. Ignorance is something you control. You
and
not
more to
knowing
that,
is your own doing.
and more to that, patience. Like, what's the rush of making? You need to have $500 a month positive cash flow. Like, so to the question that was earlier about only on market appreciation. My market appreciation on my units is in the thousands every single month. I just don't see it. I have it on paper, but I don't care. I have a full-time job. My cash flow is what I do for a living. I get paid I have a job. And so I get paid there. My market appreciation is creating all my wealth for the future. You know what I mean? And so patience in general, just have patience. You'll make a lot of money in real estate as long as you don't sell it.
Jazzy, you want to bring on Johnny Alvarez? He just put up his hand. He wants to say something to us.
Oh,
Johnny Alvarez,
yes.
I'm going to
What's
bring
up,
you on
Johnny?
right now, man. 1 second, bud. Johnny Alvarez, you there? You're unmuted and live, pal.
I think I need to screen. Johnny,
Hey, how are you?
we're great. Thanks for joining us on Brunch. How you doing?
Good.
What's up,
Excellent.
Johnny?
What's happening?
Well, we just started last year doing some investment. We purchased some properties in London, okay, and we closed this year one property here in Leduc, close to Edmonton.
Oh, yeah, Leduc, Oil Town. Yes, sir.
Yeah. So through the Kispire community help us a lot on this, okay? So we're looking forward to the next move, okay? With this uncertainty, but at the same time opportunities. So that's why we're trying to diversify and see all these other options, okay? So
Can I ask you a question? If it's too personal on this live, please just let me know. I don't want to overstep any boundaries. Are you working at the present time?
yes.
What do you do?
I'm working for the oil company here in Alberta, okay?
Okay,
Also my wife, and she also works here in Edmonton.
right?
Okay.
And it's stable, like, doesn't look like you're going to be losing your job or anything. It's quite stable.
Well, we don't know, but for the time being, we are holding, this. Our company is still doing well.
Good.
There's some projects coming, so we
Okay.
expect this. I've been in the oil industry for more than 30 years, and this is a cycle.
Awesome.
We have the good opportunity here. Yeah.
And your property in London, is that rented?
Yes. It's a 5 years property management included.
Oh, they're in Lux, London. They're in
You're in
student
Lux,
housing.
London?
Yeah.
Awesome. Great buy. Good for you.
FYI, quickly, I just got an update from the CEO. I have some units there for anybody that's looking. I don't have enough to put it out as an email to the entire database, but if anybody wants a few units, let us know. Johnny, tell us about your experience with that. How did you do with it?
Oh, awesome. So, it was, we closed the deal back in October last year. And since then, we have the monthly payment, the rent, no problem, paying off the mortgage. Awesome. I mean,
Well, what kind of excites me after having this quick conversation with you is that you're not worried to invest outside of where you live. And so that is something that is very exciting to me, because it's like, I know who I'm speaking to now. And here's what I would say. Do you have capital to invest right now that's unregistered? Again, too personal, just say, Jas, let's talk later. Do you have capital that's unregistered to invest?
Yes.
Yeah.
Yes.
Okay. So here's the thing. If you are happy with Lux London, you and I are going to be throwing a party in 5 years if you invest with us in Toronto. Legit.
It's good.
I have a huge reputation to uphold. I will not let you down. I'll personally take care of you, Johnny.
Okay.
And this is also a good reminder, Jas and Johnny Alvarez. This is a community, so I would really ask you to connect with John Lombardo. That's the guy I spoke to yesterday.
And just before that, sorry, Simos, sorry to cut you off. Johnny, what I want you to do is Tyler, if you can make a note, let's reach out to Johnny after this call. Let's set something up with me on Monday.
Beautiful.
Okay, I want you to take a look at those.
Actually,
sorry.
I talked to Taylor yesterday.
Okay.
Yeah, for this session today. Yeah.
Okay, perfect. I want you to look at the opportunities that we've sent And I think the one that you should be looking at is either the one in Etobicoke or the one in Barrie. Okay. One of those two are definitely the ones that I think you should be looking at right now, because here's the thing. The one with Barrie, like it's already set. It's done. Like it's happening now.
And it's
you know what I'm
guaranteed.
saying? You
It's
do the
guaranteed.
math on that. You do the math on that one, Barry, that you have the capital go 20% down plus the closing costs on 750. I think you're probably looking at actually full closing costs on that, about 168,000 cash required to close. You make sure you're comfortable with that. I'll push the closing date out for you, but I'm going to sleep real well knowing that you got in that one because it's rented for you already. So that
and guaranteed, Jas.
And that's what I mean. It's guaranteed with a rental of 3,400 or something like that, guys. We're at Bobby and Simos. I know you guys.
I'm going to take it a step back to community. Jas, when you're speaking to Johnny Alvarez tomorrow, please have Tyler do an intro to Johnny Lombardi, only because Johnny's in Montreal and his biggest fear, and this isn't about sharing people's thoughts. This is about every one of us have had these thoughts, and you invest where the returns are best. That is our strategic partner, Michael. That is what he says. He says it for a reason.
Well, Michael and Scott.
I want Johnny A to share his out of province investment experience because he worked with pros. So the more our community shares within each other, because I'm not in the London, like I have nothing to gain from selling you London. I'll connect you with the people. But what I'm saying to you is I have everything to gain from you guys making moves in the right direction. And if and when you are going to invest in the GTA, I will be humbled and honored to be your guy.
And Johnny, just to make sure that just make sure that we answered your question first and foremost. Did your question get answered?
Yes.
Awesome. Thank you so much. Not everyone's comfortable coming on live. And so we really appreciate you coming on live. Thank you.
Okay. Thank you for you.
Okay. Bye, Johnny A. We'll see you later, buddy.
Bobby, you want to take one more question?
What have we got here, you guys? For the rental guarantees, would the builder also freeze the maintenance fees for the same term? That's from Ijan.
Well, the one with the rental guarantee, it's a duplex, so it's not a condo. It's a semi-detached home. It's a freehold home. It doesn't have any condo fees. If you might be thinking about the property management fee. If that's what you mean, they don't need to freeze it. They're already guaranteeing the rent. Let's do another one.
Ijan, just a quick FYI, you're more than welcome to call my cell after. I'll be available. My regards to you and your beautiful family, and my regards to your amazing husband as well, Michael. So nice to hear from you, Ijan.
All right, one more. We'll cap it off. I want to make sure everybody gets to enjoy the day. But before you do that, you go to reccanada.com/for sale. reccanada.com/for sale. Thank you to everybody on YouTube, Instagram Live, Facebook Live, and here on the webinar. Really appreciate you guys. Everyone who signed on to the webinar will be receiving an email with that same link. Bobby, you get one more question. Throw it at us.
So I was actually going to ask from Cheryl Webb, can you list the web page again? I can't find the reservation page. So Tyler is going to put it in the chat just one more time, right? And then just make sure that you click through all of those things. Enter your email, ask for more, and it'll take you right to the Google Drive where we have all of this information posted.
But also,
now,
as mentioned, it is coming. Like an email is coming as well. So if you don't get it now, which Tyler just put it up, you will be getting an extra email at 2 o'clock. Nobody needs to rush and worry. If you have the time right now that it's fresh, go there now. If you need to go later, don't worry about it. We're here every day like we always are. So don't create any anxiety for yourselves. Just go and get your information right. We'll make some moves, guys.
Exactly. Gentlemen, thank you for having me. Why don't you guys leave us with a couple of your thoughts? I feel like it's always the best way to end any particular brunch.
Go, Simos. You start off.
Yeah, and that's very easy for me, guys. I want to thank every single person that could be anywhere in the world, but they chose to be here with us this morning. I want to remind everybody to be grateful. Today, we just so happen to have a nice sunshiny day in the GTA, but if the clouds were here, I wouldn't give a shit anyways. Grateful to be healthy, grateful to have beautiful children, grateful to have the luxury to talk about real estate instead of worrying about a million other things. So I would tell everyone to stay grateful. I would tell everybody to stay healthy, to stay sharp. We're here because we have the luxury to be here. So I absolutely send my love to every single one of the households that's here, that's not here. And if you have any questions on anything we discussed, just feel 2 seconds to reach out. God bless all of you from Simeon.
Awesome, Simos. I am a son of immigrant family and son of a taxi driver and a factory worker. And I don't have a formal education. I learned everything, as I mentioned earlier, through personal education. And a couple of years ago, I started a podcast, as most of you guys know, and sat down and started sitting down with guys and gals that had billion-dollar companies, started it from scratch, or went from 0 properties to 11 in a year, or went from 10 properties, went bankrupt, and then got to 500 to 1,000 doors. One thing that I've been able to learn is it all comes down to taking action. Whenever you're ready, the difference maker in your life is going to be taking action, because you can not the a lot of people say knowledge is power. I like to add to that actually that's just potential power. The use of knowledge is power, and how you make use of knowledge is by taking action. That doesn't mean that you need to invest into a property today, because we talked about a bunch of opportunities, but you need to take action once. I speak to a lot of investors in the last 15 years, and there's still investors that I speak to now that wanted to invest 15 years ago and they never did it. And it was all because they just never took that leap of faith. Hundreds and hundreds of millions of people have done it before you. Ask the questions, make sure you get in touch with the right people, and then it's up to you to take action. Thank you so much. As Simos, my business partner, mentioned, thank you so much for joining us. You could have really been anywhere today, but you did choose to be with us. If you're watching the recording, you might have lost out because you didn't watch live. Make sure you do. Get at us live. To Tyler, Bobby, Laura, and the media squad, I love you guys dearly. You guys make all this happen. You allow Simos and I to sign on a minute before and make us look good. I truly, truly appreciate every single one of you. Thank you.
Everybody enjoy your beautiful Victoria weekend. Bye from the GTA, guys.